I know a lot of people are interested in investing in real estate via crowdfunding platforms. Now, I've been investing in Fundrise for about 2 years now, so I just wanted to give you guys a quick overview of what Fundrise is, what are the pros and cons of investing with Fundrise, and then we'll go into my Fundrise account to kind of break down some of the website's features. But first off, this video is not sponsored by Fundrise, and while Fundrise does offer affiliate links, I am not going to post my referral link. I want to be able to provide the best, most unbiased information possible and let you decide if investing in Fundrise is right for you. So let's get started. Now, in the old days, investing in real estate was tough to get started in. You either needed a large down payment and a good credit score to purchase properties on your own, or you could collaborate with others and kind of pool your money together and purchase larger products like apartment complexes. But the problem with that we ran into trying to pool your money with others was that you still had to bring a considerable amount of money to the table, usually hundreds of thousands of dollars or millions of dollars. And you typically needed to be an accredited investor to be able to participate, which means you needed to already be a millionaire. And you needed to be part of the inner circle of people that were already doing this type of investing to learn about upcoming projects. So for your average Joe, it just wasn't feasible. But with crowdfunding sites like Fundrise, instead of collecting millions of dollars from just a couple of wealthy people, they instead collect tiny amounts of money from thousands of people, ordinary people like you and I. In fact, you can get started investing with Fundrise for as little as $10. Now, right off the bat, I do need to caution you that if you're investing with a company like Fundrise, you need to be in this for the long haul. And by that, I mean you should only put in money that you don't expect to need back for a minimum of 5 years. If you attempt to withdraw your money earlier than 5 years, you'll end up paying a withdrawal fee, and I'll talk more on that in a moment. Fundrise is a private fund with low liquidity, and this is important because it has a certain set of pros and cons associated with it. So let's explore that. First off, it is low liquidity. Unlike a publicly traded REIT that you can easily buy and sell anytime the stock market is open, with Fundrise, you only have quarterly redemption periods where you can withdraw your money. This means that there are only certain times of the year that you are allowed to sell off your investment. So it's a relatively difficult process to get access to your funds, making this a very poor choice of investment if you think you might need these funds at a very specific times, like maybe your car breaks down and you wanted to use this as your emergency fund and you want to sell that investment to fix your car. If the next redemption window is 2 months from now, that's going to be a problem since your car needs to be fixed now and not 2 months from now. Secondly, it is a private fund, and as such, Fundrise reserves the right to stop redemptions entirely if they deem it necessary. When the recent pandemic kicked off, Fundrise temporarily paused redemptions, meaning that you couldn't sell your investment at all for a brief period of time. Now, these talking points obviously make it sound like there's some pretty serious problems with investing in Fundrise, but that's not really the case because each one of these talking points that I just mentioned has a certain set of pros and cons, and we've already talked about the cons, so what's actually good about investing with Fundrise? Well, first off, since it's low liquidity investment that only offers certain redemption dates, it means that Fundrise doesn't have to keep a large set of money available to constantly be redeeming shares that people are trying to sell. By not needing to set aside this large amount of money for redemptions, Fundrise is instead able to invest a larger percentage of their assets into projects which are going to make money for you, which in theory will boost the overall rate of return for everyone. And secondly, and perhaps most importantly, is that by making it difficult to withdraw your money, it removes all of the emotions from investing. Nobody wants to lose money, and most people immediately panic and start selling assets at the first sign of trouble, but letting your emotions dictate your investing behavior is actually the single worst thing that you could possibly do. Let's take a look at a popular REIT, Avalon Bay, a company that specializes in owning and renting apartment complexes. If we look back at the stock price of Avalon Bay, we see these massive swings during the pandemic. The price of Avalon Bay dropped from a high of nearly $230 per share to only about 131 bucks per share in only a matter of days. Now, keep in mind that the value of these shares in Avalon Bay are supposed to reflect the value of the underlying security, which in this case is the actual value of the apartment complexes that they own. So did these apartment complexes magically lose 55% of their value in a few weeks? Of course not. This is a result of panic selling and emotions and has little or nothing to do with the overall profitability of Avalon Bay. Fundrise, on the other hand, didn't have a problem with panic selling, and as such, the value of my Fundrise account wasn't impacted by the pandemic in the slightest. Fundrise projects are separated into two different categories: equity projects and debt. With equity projects, they're going to be going out and actually buying real estate. Maybe it's an existing apartment complex that already has tenants in place, or maybe they're buying something that they want to renovate and improve on, but either way, Fundrise is actually purchasing the property. Debt projects, on the other hand, are essentially loans given to other real estate developers. So instead of buying the property themselves and rehabbing it, Fundrise is loaning money to someone else who's doing all the hard work and renovation, and in return, they're just simply collecting interest on that loan. Now, obviously, the rates of return for Fundrise are going to fluctuate slightly from year to year, but historically, Fundrise has averaged roughly a 10% return since it was founded in 2014. Now, let's jump into my Fundrise account and we'll look at some of my returns as well as some of the features of the platform. All right, guys, so here we are inside my Fundrise account. Now, as you can see, I started back in August of 2019, so doing this for a little over 2 years now, and I started by investing $1,000 with the platform, and as you can see, it's now grown to close to $1,200, so I've profited about $173 over a 2-year time period, and if you do the math on that, that comes out to about an 8.5% rate of return per year. Now, as you can see, the amount of money goes up every single day. They calculate your dividend payments daily, which is kind of nice because you can always see it growing. And then these little spikes are going to be your appreciation, the value of those assets actually going up. And as you can see, it's been a nice, slow, steady increase over time. Now, what I really like about Fundrise is they're very transparent with all of your accounting process and fees and that kind of thing. So over here on the side, we can kind of see a breakdown of how my profits were calculated. So far, I've earned roughly $46 worth of dividends and about $130 worth of appreciation. There is some small fees, which we'll get to in a minute. Now, you don't have to actually pay these fees. These fees are automatically taken out of your portfolio balance. So it's not like you have to send Fundrise a check or anything like that for these fees. And so my grand total, like I said, is $173.72 in profit in about 2 years. Now, they do offer a couple of different investing tiers, and I'm currently at the core level. Now, these levels did change recently. It used to be that you had to have at least $500 to get started, and then $1,000 was the core level. But that has recently changed where you can now get into investing with Fundrise for only $10. Investing $1,000 would no longer get me into this core tier, but they did grandfather me into it because that's what I originally signed up with. And then if you scroll down, you can kind of see how your funds are allocated. In my section, it is mostly in value add and opportunistic type of projects, and I was able to specify that when I signed up for the core level 2 years ago. I was able to kind of dictate a little bit where my money was going to be going into. And like I said, what I really like about these guys is that they're very transparent. Unlike a REIT where you have no idea what buildings these REITs actually own, with Fundrise, you can actually come over and see all of the different properties and click on them and kind of see what it is that you are owning. So here it looks like we got some apartment complexes in South Carolina, and as you can see just by clicking on it, like, this is some pretty nice stuff that they're buying here. Like, I wouldn't have any problem whatsoever living in an apartment complex like this. This is nice stuff that they're buying. And as you scroll down, you can see a little bit about the property itself, the strategy behind why they bought this particular one, the business plan, why they invested in this asset, as well as, Charleston in general. And then if you click on their strategies, my internet's slow, it can kind of show you what the overall different tiers are. Like I said, the tier that I chose was mostly value add and opportunistic types of strategies, which theoretically have a higher rate of return in the long run, but are a little bit more risky because what they're doing is, these fixed income assets, they might be things like an apartment complex in the Midwest. It's not really generating significant amounts of appreciation or anything like that, but it does have nice, steady rental income rates coming in, where some of these on the right-hand side are going to be more like your coastal properties, which could have significant price appreciation. They're going to be doing things like acquiring and redeveloping the real estate, so fixing it up and trying to make it better, doing some value add that way. Now when it comes to your tiers, it's based on how much money you have invested with them. So like I said, I'm in the core level, but currently if you wanted to be in the core level, you would have to have at least $5,000 invested with them. I was grandfathered because these levels have changed recently. So if I were to sign up now, I'd only be in the basic level with $1,000. But as you can see, each one of these different levels offers you a little bit more different perks, primarily in how you can customize your portfolio and have at least a little bit of say-so about which properties you're buying and things like that. Now, you're not specifically saying, hey, I want this one particular property necessarily, but you could specify, hey, I want more long-term growth things in the coastal markets, or I want more debt as opposed to equity projects, things like that. Now, all of these programs offer both auto invest and dividend reinvestment, which I think is fantastic. I currently have my dividend reinvestment turned on. I think that's the way to go in the long run. This way, all of my dividends that I'm paid out on a quarterly basis, they automatically get reinvested back into my Fundrise account. This way I get those sweet compound rates of return. Now, if you scroll down a little bit, there are some fees. Like I said, there's 2 different fees, and combined they make up about 1% per year of your total assets invested. But your balance, your profits, where'd it go here? Oh my goodness, go back to the home screen. Your profits, this $173, that is net of fees. That is after the fees have already been taken out. So yes, you're getting charged fees, but the rates of return, even with those fees, are pretty outstanding. Now, I chose some of the long-term growth strategies, those value add and opportunistic strategies. And theoretically, their immediate rates of return aren't all that great. They're still going to have a nice rate of return, but it's not going to be phenomenal. It's more based on future growth. Because some of those in apartment complexes, like an apartment complex in the Midwest, yeah, it might be generating nice cash flow now, but rent probably isn't going to go up significantly in future years, and neither is the value of the apartment itself. So those rate of returns are going to be relatively stable throughout the years. It's not going to really grow significantly. But other properties, like the coastal properties or states that are experiencing large population growth rates, the growth rate for those might be significant. So while it doesn't pay out a ton today, in the future, give it a couple years and your rates of return could theoretically be a whole lot higher. Now, like I said, there are some fees associated with withdrawing your money if you withdraw your money prior to having it sit there for at least 5 years. So they give you 90 days to try it and redeem it for no fees whatsoever. But if you redeem between 90 days and 3 years, so like I'm sitting at 2 years, I would pay a 3% penalty of my total assets. And the purpose of this, of course, is they want you to be in it for the long haul. Just because you liquidated your assets they don't want to have to suddenly sell these apartment complexes at inopportune times just to try to repay you. They want you to be in it for the long haul because real estate is not a liquid investment. It's not easy to just simply replace you as an investor. And as you can see, these fees do start to drop off the longer you've invested with them, to where after 5 years of investing, there is no longer any fees. So there you guys go, an overview of the Fundrise platform. Personally, I'm very happy with it as it helps me to diversify away from stocks and provides a nice steady growth rate. If you enjoyed this video, consider subscribing and leave a comment down below on your thoughts about the platform. And as always, I'll see you all again next time. Thanks.